Hello, in this video we are going to discuss title searching in support of insurance claims processing. It's a quick little description for you specifically about the mortgage holder and looking at mortgage records. This is Dave at titlesearch.com and AFX Title. A lot of our clients are using title searches for insurance claims processing, and one particular area of interest is the mortgage section. When a mortgage is found on a title search, an insurance claims adjuster or processor is going to look at it to determine if there are other insured interests which need to be taken into account when processing that claim. Typically, you're going to match it up with what's on the underwriting. Was there additional loss payee or additional insured on that underwriting when the time the policy was originally placed on the property? In many cases, the mortgage company listed on the title will be different than what's on underwriting. Couple scenarios how that might happen. One could be the mortgage simply was refinanced. The original company was paid off, a new mortgage is placed on the property. There may also be mortgage assignments where that original mortgage company sold that loan to another company, maybe sold 2 or 3 times over the course of a loan. So keeping an eye on the mortgage company on title, comparing it to what's underwriting, and making sure that the correct entity is taken into account in terms of additional loss payee if that's needed, or to get a sign off on that check. Focus on the mortgage more on other factors because that'll keep you from writing the check twice. Usually the ownership is not going to be a big deal. Liens may be an issue to look at if there's any kind of fraud or financial distress. But that mortgage company, mortgage holder, is important to take a look at on that title search and making sure you got the right company so you don't send a check to a mortgage company or even miss a mortgage. Sometimes the underwriting will show no mortgage holder and the check is issued directly to the insured, the claimant, and then come to find out there's a mortgage company that pops up and said, hey, look, nobody understood our interest and somebody owes us some money. There may also be second mortgage companies, if they're significant enough, might need to be taken into account. There may also be subordinated instruments. For example, if a first mortgage is placed on a property and then there's a second mortgage that comes into play, if that first mortgage is going to be refinanced, then the second mortgage holder will need to subordinate their interests to make sure that they still stay in first position. Also take a look to see if there's other borrowers on any mortgage other than the insured, because they may have some type of insured interest. They may be part of the claim either as a claimant or even as somebody to subrogate against if they have other insurance that comes into play. Maybe auto, maybe another property, maybe a renter's insurance for the property. And then take a look to see if there's any history of default. When we run a title search, we're going to look to see if that current mortgage had any default that was cured or any kind of delinquency that was cured. That may help you out taking a look to see if there's any kind of fraud or financial distress that may have originated the claim or have expanded the claim. And the last thing that we're going to take a look at is any type of MERS or electronic records to see if that mortgage has been placed into any kind of investment pool and if those investors have any insured interest on the title. So insurance claims have a great use for title searches. The mortgage holder section is just one part of that title search. It may be liens, it may be other owners, it may be title history. But the mortgage section is really important to insurance claims adjusters to make sure that they only have to write the check once and not pay somebody off later that wasn't taken into account the first time.